All right, so I'm going to look at how to manage my positions for the covered strangles. Let's go to the tasty trade. First one is Robinhood. Robinhood was dropping quite a bit, but when I entered the trade, it was at 38.15. So that's when I bought the 100 shares. I sold a 35 call. So it actually is still good because we're at 36.84. Notice how if I get a sign on the 35, you do 38.15 minus 35. So I'd lose $315 off that in the money covered call. But I took in $455. So that's a net gain in the end if you do that. So what we're going to do is just close this thing out. The bid ask 0.36 is at 31, which I don't think it's going to get there. So I'm going to close the covered calls and the cashier. Sorry, the covered call and the shares. Might be easier to just do it in two separate orders here. We just close 100 shares. Actually, probably have to close the covered call first. I don't know if it really matters. I'll be getting it out right away anyway. All right, so 1.8 or so. I'd rather not let it expire just because you have to pay $5 on the assignment fee. However, I'm trying to see if the bid ask is worth just waiting it out. There is a risk that we get down to 35 today, theoretically. Because of the bid ask, I'm probably just going to wait until it expires and get assigned and lose my shares. It's not going to make much difference with the $5 difference here because the bid ask is pretty high. So I'm just going to wait this out. I'm not going to re-enter because I need buying power, but I'll just check on it later today. As long as it doesn't go below the 35, should be good. All right, next, iron. It was near 14 and now it's near 11, pretty much where I bought it at. So slightly higher than I bought it at, but both of my put and call premiums have decayed almost to nothing. So I got 0.62 in the call, 0.41 on the put. Could be fine just letting it go, let it expire, re-enter Monday. I don't think rolling would make too much sense here either, because then I have to possibly pay around the $5 to close it. I'm just gonna let these expire out and then we'll re-enter on Monday on those. Silver took a little bit of a drop since when I did it. 28.43 is when I bought. We're at 26 on the put, 26.61 or so. Probably not going to get a sign today, but if it did, it's fine. So I'm just going to wait this one out, let these expire. I mean, if I want to be safe, I could buy it back for $1, but then I'm spending $2 possibly. And then I could just do it anyway Monday. So I'm just going to wait until Monday on these as well. As you can see, I'm not really doing much. SAUN bought. I sold two puts on this one to start it out. It's at 17.83. It was up to 20 at one point, and now I sold a 10 put and a 9 put, and it's pretty much flat at this point. It's still at 28 days. I went really far out of the money on these just to deal with the high volatility on them. SCHD, by the way, I did get assigned on my 28 today. I saw this morning. Let's see where it is. So I sold a 28 put with SCHD. I got assigned two contracts today. Check on the Discord. It was if assigned on 28. I already had 200 shares. I just got assigned 200 more shares. So now I currently have 400 shares of SCHD. I'm just going to hold these at this point. If you look at the premiums, they're They might be better now, but they were really low when volatility was low. So I'm probably not going to do anything. This is in my Roth IRA, so it's not on my Tasty Trade right now. We could look at the 28, and we're down to 27. If I sell a covered call at 28, in 3 months, you get about zero point 0.5 or so. So you're looking at about 2% in 3 months. And you would hit the dividend. This is another about 1%. So 3% or so in 3 months isn't horrible. Could consider going even higher, even though you get less premium, like 29. You get a $100 capital gain on it per 100 shares. It's If you want to, you could, but you don't have to do these. I'm just gonna hold my shares at this point. So what was good about it was I sold the 28 put when it was around 20 and a half, and then got assigned at the 28. It did drop below that. It's currently 27, but I was able to get those 100 shares at a cheaper than the price when I first entered the trade instead of buying the full 400 shares at once. There's a little background there. And any questions? I think it's just Matt. I'm gonna type out any questions real quick. I didn't really do much because I don't need to. Sometimes the best trade is not to do anything. INTC. Um, Let me look. Let me look at the stock. If it lets me. I don't know if it'll let me. Um, boop, 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 boop. Check on the daily. Matt, you thinking of a covered strangle with it or ask your put? What are you thinking with it? Any. All right, we're down a bit. I mean, a lot of the tech sector's down anyway. So, hey, sorry, my dog. Stop it. All right. Um, yeah, it hit a recent support at 18.7. It's been touching 18.7 for quite a while in September and August. And now we're there again. So if you just look at history, bounced up from there, bounced up from there. The chance it bounces up from there, I just personally don't like the fundamentals of the company. So if you're okay getting a sign and wheeling up, if I did like the company's fundamentals, then I would probably sell around a 17, maybe a month out. And then if you want to covered strangle it, I would probably sell around the 2021 or so. Just look at it. Earnings earnings are on January 23rd. I would probably sell the January 17th, trying to get some premium before that. You have to go 17.5 to 16. That's odd. There might have been something with a dividend or I'm not sure. I can sell the 16, should be relatively safe. 17.5 though, I think it's reasonable right here. You can sell the 17.5 if you want. 0.45. Buying power is only $200. It's a possible trade for me, but I'm trying to keep my buying power. So, yeah, might be decent. As for the call side, you could sell the 21, maybe even 22.5. Decent premium there. And you get the capital gains from 19 to 21 or 22. Oh, you have a put, sorry. Um, $1 below, yeah. 17.5 sounds good. See, I noticed you wrote that after I found it myself. Yeah, I think that should be good. Any other questions you have? 22, not bad. You get a little over percent a month if it's fully cash secured. If it's on margin, you get even more. Ah, okay. And then we're also fully cash secured. Okay. Would it be okay wheeling it if you got a sign? Okay. Yeah. So then just wheel it out. And then if it does drop below that 52-week low, you could possibly sell a covered call a little above the 17.5, try to get some capital gains. Or if the 17.5 covered call pays really good premium, you just get out of it from there. Any other questions? Well, guess we're gonna end it here. Have a good rest of the holiday, Matt, and I'll see you on Discord or chat. You too. Have a great holiday.